Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. And we really got to talk about the stock market because this is the fourth day in a row that the market has been down, and as usual, people panic, people are selling and acting a fool when you really don't have to. So remember, and we just said this, last week? Every 21 days, historically, on average, the market hits a new all-time high. So this is not bubble time. This is not panic time. This is not the time to sell and run for the hills and quit investing because you had 4 bad days out of 365. Okay. Remember, the stock market since January of this year is up 19.57%. 19.57%. You're up close to 20% if you started in January and left things alone. So this is not time to panic. That's just a PSA. I'm going to get to 4 stocks that you might want to look into. Because when we talk about the stock market being down for 4 days in a row, or just kind of blah in general, for some people, remember that it's not always even. For example, when the stock market was doing whatever it was doing last year and the year before and the year before that, it was the tech sector. It was tech stocks that were just the absolute place to be. There was a one point in time where energy stocks like Chevron and ExxonMobil were not the place to be. And every year or two, these things start to shift. Right now and in the previous quarter, it is this category that has been the best, and that is consumer discretionary. That is places where people spend their discretionary income. When you got extra money, you might go to these companies, and the stock market responds to that. The other good thing about consumer discretionary, at least right now, is that holiday season is coming around the corner. And people, if they have discretionary income, are going to spend that money usually at some of these places. So it's a good time to do your research. If you got these earlier in the year, let's say, I don't know, June, when I tend to evaluate and factor these things in, could be a good chance for you to jump into it. So I'll go into quick, just 4 real quick and let you know, like, hey, these are some things to look into. If you want me to do a video comparing 1 or 2 of these and give you kind of more detail into them, feel free to let me know. I'll give you their year-to-date performance, kind of a real quick overview of what I think about it, what I like about it, and just, again, help you to kind of divide everything out. There are 11 sectors as a whole. I think I did a video on that previously. If you didn't see that, I definitely have a post on public. I'll make sure that I put my public link there, and you can scroll through and find that post where you break out all 11 sectors. So consumer discretionary last quarter, that's the one place. That's the one place that has been positive. Let me double check that because I read it from CNBC, so excuse me for quite a second. Other thing to mention too was a holiday weekend, so we really didn't get the full week to see that maybe the market was up, but it's going to look like this week is not going to be great for the market. Again, it's a week. I'm not really concerned about it at all. So let me just check that number. Okay, so the consumer discretionary sector is the best performing S&P group, up about 0.25%. So it ain't that much, but all other sectors are in the red. So every other sector is negative. Only consumer discretionary is the only positive one in the past quarter. A quarter is 3 months. All right, so let's go ahead and get into them. So I have pulled out 4 that I think will do well, especially during the holiday season, and that you should at least keep your eye on. And remember, the market as a whole is up about 19, let's just call it 20% for the year. So the first one we've got is Disney. Now, I think Disney is a value. I do not think if you invest in Disney now that you are going to see the biggest return. I'm telling you now, I think Disney is a value. Meaning, if you get it now, a year from now, 2 years from now, 3 years from now, 5 years from now, you're going to look back and say, dang, that was a good play. I got it for pretty cheap. So Disney right now is about $175 a share, and it is only up 2.6%. Why am I bullish on Disney, and why do I have hope and faith in Disney? Is because we know Disney Plus is out there. That's going to continue to grow. We know that as things open up and the movies really come back, that's going to be another avenue. But more importantly, perhaps more importantly, we know that the theme park is a thing, right? We know for a fact that that's where people are going to move. On the sports side of things, we know that, and this is more for me because I'm really into college sports, is Texas and Oklahoma going to the SEC network, which is owned by ESPN, which is going to bring more media dollars to ESPN, which is owned by Disney. So all these things are trending for Disney in the long term. Again, I don't think you're going to see the huge run-up that you saw last year when Disney Plus launched, but I think they're going to be one of the biggest players. The other really cool thing about Disney is their content. Yes, we know that Disney is a content creator. They make some of the best stories out there. Your favorite memories have probably been from some Disney property at some point in time. Marvel, Star Wars, Toy Story, whatever it is, right? But the thing is this, they did a rating, I think it was the LA Times if I'm not mistaken, and they rated all the content we've had during COVID and what was quality and what was not quality. Disney was the only one that viewers thought was quality, that they actually still put out good movies as opposed to meaningless sequels and stuff like that just weren't all that great. Netflix, they've got some hits, they got a lot of misses too. Disney very rarely missed. Like, really think, what was the last bad Disney movie or Disney TV show that you saw? I can't think of one. Okay, so just throwing it out there, they are a quality company. I think it's a quality stock or a value stock that's going to take some time to really kind of move. And Disney has done this in the past. So just throwing it out there, you're not going to make the most money right now, but I think you're going to set yourself up for the future. So that's Disney. You've got Ulta, which is the Ulta beauty company. They're up 33% for the year. Just like I talked about with Estee Lauder, also in that same beauty type of category. It's just a strong category to be in. You know, I don't use the product, so I can't wax poetic the same way that I could with Disney, but the numbers and the company speaks for itself, up 33% this year so far. Keep your eye on that, and also keep your eye on Estee Lauder. That ticker symbol is EL. It's discretionary. Maybe you'll see people buy more makeup and things as things open up, perhaps for the holidays, assuming people go visit their family. If we stay at home, perhaps you put no more makeup and stuff as you're sitting at home doing camera stuff like this. Again, I'm only looking at the numbers, and the numbers look good for Ulta and for Estee Lauder as well. So keep an eye out for that. And then lastly, you got CarMax. Now, I did a video last year around hurricane season, which unfortunately we are in that time now. Prayers out to everyone in New Orleans and in any affected area for the floods in the Northeast as well. However, unfortunately, it's a really good time for CarMax. This does happen every hurricane season almost, where CarMax takes off due to this type of stuff. When you hit flooding, hit hurricane season, people need to replace their cars. It happens. Again, it's unfortunate, but it is a trend that we see for CarMax. But we also know, on a less grim note, I guess is the better way to put that, is we know because of the car shortage that used cars are shooting up in value, or in price rather, and that's going to continue for a little bit. This will not last forever, but we do know, again, this is lasting for a little bit. CarMax is up 41% over the past year. I'm sorry, over the from the beginning of this year. So year to date, January to now, up 41%. The good thing I like about CarMax, looking at the chart here, is it goes in waves, which is what I like for a good short-term trade. I call it channel trading. I talk about it in the Investors Toolkit. You do want to sign up for that. We've had some really amazing reviews over the last few days about how great the course is and how it has helped them where they are and how simple the course is. But we'll talk about that on another day. But most importantly, I think you may find a good entry point if you're looking for something short term. I think CarMax is really where you want to be based on the season and the space that we're in. If I'm looking to hold more long term, maybe I go for definitely Disney for long term, Ulta for now. Lastly, the last company I'll bring up here is Best Buy. Don't sleep on Best Buy. Best Buy is actually up just 12%. And it also has a lot of those peaks and valleys, those waves, which again, for a short-term trade, this might be something that's good for you. But also, we know that Best Buy is the place to be for the holiday season for TVs, cameras. The camera I got came from Best Buy. I think the computer I got was from Best Buy too. But it's something that we know they have somewhat of a leg up on Amazon, at least right now. We'll see when those stores actually roll out and what they do with Amazon. But we know that's something you can almost bank on. You already got back to school, so you might have missed a little bit of that season. But Best Buy is hard to miss. I think it's something that's solid. Again, 12% for the entire year. It moves in those ways very similarly, but to a lesser degree. For CarMax, and what I mean by that is, you'll see, if you pull up CarMax year-to-date chart on Public or Yahoo Finance is what I have, you'll see CarMax has these huge ups and downs, and it's consistent, which means that, you know, if I know that it's going up and down like that, I might be able to time it just right, get in on the bottom, sell at the top, and leave that alone. Same thing for Best Buy, except the waves they're not as pronounced, so they're kind of a little like that. You may be able to find a channel for a short-term trade there. So again, if I were to divide these four, I would say short-term, if I was looking to do something short-term, I would probably go for CarMax and probably go for Best Buy. If I'm looking for long term, sit back, but consistently make money, which I think you're going to do with all these, I'm probably going to go for Ulta, leave it alone, come back in 6 months, come back in a year, you're probably going to be good. And definitely Disney. I will probably sit back and just hold Disney for an entire year or more to really see the benefit there. So those are just my quick thoughts on those 4 companies. These are all consumer discretionary. When we have more money, this is where people go. I think as unemployment continues to dissipate and wages have gone up in some sectors, hopefully that continues to stay and people are out more, they go out and spend more when this thing is all over, you're probably going to see a lot of these continue to soar. All right, so that's it for me. I'll talk to you guys later.